Hello, everybody. It's good to be back. Today is Thursday, September the 5th, 2024. Here is my not quite shaven from coming back from vacation face. Quiet days in the market. I always like taking time away, really in whole, in totality. Obviously, of course, check the markets a little bit while I was away. And I love coming back and seeing what the trends are. There was a good bit of fear in the markets. I don't think it's an end to the bull market by any means, but I would expect some doldrums for the next month or so. We'll look at the charts and get a lot more in depth since it's been a while. And tomorrow I'll have a bit of a longer show recapping, best trades today going back from the last 52 weeks, the usual closeout show we do on Fridays. Also, I'll share a link as I'm leading a webinar on Wednesday afternoon for the CMT Association about trading trends. It's going to be similar to this. Hopefully, a good bit of participation towards the end of the presentation. And yeah, I'm going to go over winning trades if there's still juice in them, and if we want to get in. Okay. So for today, interesting market move, an interesting week, depending on how much attention you've been paying to the markets. But let's share the screen first on the headlines and what really happened today. Kind of a quiet day, but some stuff did move around, and I'll show you just what happened. So natural gas and silver rip, okay, while healthcare, financials, and industrials dip. Little play on the words there, I guess, with the rhyming. But yeah, nat gas up 5.5%, a big move. Yours truly, my country, Egypt, said they were importing nat gas. I didn't really go in depth in the headlines. As you know, I'm a technician first and a news follower much below. But yeah, Egypt is importing a significant amount of natural gas. I don't think for the first time in a long time ahead of, this early in the year, in their season. That has a catalyst to it to push it up 5.5%. Also, silver was up significantly, up 2%. We'll look at the charts. And then just some profit taking. Healthcare has been on a massive run, as has financials. So not shocked to see these slip, 1 to 1.5%. And the industrials, they also sold off too. And then the best three trades of the past week, so this is kind of wonky because, Monday we were off. But so go including today's session and, the previous 4 sessions, the best trades have been shorting Bitcoin, long volatility. So immediately in my head right there, I wanted to buy, the ideal trade there is buying Bitcoin puts, buy Bitto puts. They're going to be extreme, but because of the move lower and vol, elevating, those probably would have been profitable. Maybe not massively, but probably would have been a good trade. And then long nat gas, the third best absolute trade in the market over the past week. So let's get in the charts. It's been a lot. So let's get into basically where I see everything as of now, because SHIB surely did move around quite a bit. All right. So let me share the screen first today on the intraday. So pretty ho-hum. We had 35 million shares, I believe, for SPY when all was said and done. I can double check that. 38 million. So below average on any time frame, 20-day average, 50-day, year-to-day, 200-day. That's below average. So pretty quiet digestion day. Vol was in quite a bit. We will look at that chart, but Vol's been up massively in the past week. Up 10.5% is pretty good kick. Excuse me, for VXX. But today it gave back about half of that. So we'll take a look at that chart. So here we are. We hit a top right at 10 a.m., right shortly after the open. We reached all the way up to 553.78 in SPY, and then quickly sold off. You see the orange line being our volume-weighted average price, very important. And we hit a low shortly thereafter, right around the European close at noon. Tried to recover, and basically right around 1:30, we were, wrestling with the volume-weighted average price for the rest of the day. Settled at 549.88, did VWAP, and we closed just a touch beneath that. Zooming out here, so what I see for SPY, so a little bit, so we, because the dates have changed and such. I think my famous last words before I signed off was that I thought SPY on Tuesday was going to be around 540 or something like that. I'm not really sure. You can check the tape. But so this is what we're seeing going forward. So so you can see where we are here with this confluence of moving averages. The highs are looking a little bit before. Some things we got right, some things we got wrong. The right was, I said we were going to come close to new all-time highs, but not quite do it. Look what happened. Got really freaking close, but not quite to it, right? Now what? So I'm I don't want to say you're sure about anything. There's a lot of technicians too, really good ones. Katie Stockton, Tom Lee, Mike Wilson from Morgan Stanley as well. They're all seeing about 8% drawdowns in the next 2 months due to seasonality, and there's a bit of bifurcation sometimes what happens here with the election year, depending on who will win. If it's the incumbent party or not. All that being said, it looks like there's going to be a lid on the market for quite some time. Probably not really a reason to buy the market until probably October. So not a huge rush. I might be buying stocks earlier than that. But I wouldn't think this is going to go up and away through new all-time highs. Okay. Yeah. So I'm looking at it. I see distribution mode to about September, around September 14th or so. So I would say towards the end of next week. And if things get really bad, or I would say I expect the sell-off to go to around 540. Okay. So that's about 9 points or 2% away from here. And if things get a little bit uglier, I see it going to around 530. So put closer to this. All right. Some of those other technicians I just mentioned, see us going closer to about even below where we had the Japan scare. I think, honestly, what I've seen was that a bunch of people seeing that it possibly clips the 200-day moving average. I don't think that's going to happen. You have to have real negative momentum for that. I just don't see it happening. I see more of a breadth and a depth picking up. Utilities hit 52-week highs today. Belgium hit a 52-week high. Bonds had a massive bid today. I was going to highlight them. You'll look in the charts in a bit. So, yep, ugly. I think probably honestly close to 530. If things get really ugly, I think we still stay inside the SPY August lows. I don't think those get taken out. That's my low. I think it'll get closer to that, but I don't think it does. So again, through the end of next week, I see a little bit of distribution. I think the market may have a kind of a perverse reaction to the Fed cutting rates. What I mean by that is I think it may actually sniff it out. And because of how bad the jobs numbers are few job openings in 3 years and such, and just a slowing economy, we'll look at some of the commodities, why they're bleeding out and why vol is rising is because of global growth fears, lack of growth. And the AI picture, when you see Qs put in their 52-week high, more than a month ago, it's losing steam, and you have broadening its consumer staples, which made 52-week high today behind Procter & Gamble and moves like that. It's a good broadening, but you got to be a little bit. I do want to see NVIDIA get back. It's the juice to the market. It's great that there's a broadening occurring, but I still want to see the leaders lead or at least get back to that. I don't think the game's over by any means, and I think you'd be wise to buy, but definitely pick your spots over the next several weeks. All right, so that is what I have to say on SPY. Let's go to what moved today and why it mattered. Okay, so nat gas we were talking about before, about the large Egypt import. Here is the 1-year nat gas chart. I would love to got a pretty tag all the way to 200-day, just as it did in June and May and January. It's an easy sell signal, in my opinion. It worked magnificently several times before, but what I see more so happening in the short term is this is being accumulated, and I think it could go all the way to 15.5 over the next 2 to 3 weeks. Okay, 15.5, just to show it on this. You get a little bit of vol expansion, which is typical with big inputs like this. And 15.5 is right about here. Might get people excited if you're long. It's essentially 2-month highs. Pretty good for nat gas. And then it probably craps out right around, I probably expect around like a 55 RSI. Right now, we're currently at 51. So give that about 2 to 3 weeks. But nat gas is accumulating right now. I particularly don't want to get long. The 21-day exponential moving average is 1387, which it crossed above today with this thrust of 5%. There's probably a little bit of juice in it. Again, pick your spots in buying the market. They have been rotating into losers. As I said, a broadening. Another example will be coming up. So they bought silver today in a multiple sigma move. They bought it to the tune of 2%, a nice move higher. Let's see what now. So I think that was a nice spurt. I think this is going to be in distribution mode over the next week to week and a half, probably honestly ebb and flowing for whatever reason with the broader market. I see this going to about 2460 to 2630, probably right around 25 half, so a little bit lower. So a nice move today if you caught it, but I do think this is going to resume its ways over the next week or so here before going higher. All righty. So that was it that they bought today. All right. So nat gas, you know where that moving average was, top left to the bottom right of your screen, a loser. And then this was more of continuation, a nice moving average here rising for silver. I think it's not a horrible idea if you can get this to settle at around 24.75, somewhere around there. That would be a gift, I think, to potentially buy this. It's a little bit scary that the highs were back here in May, and I'm seeing lower highs here. But I think it might be worth the risk if you don't include any metals in your portfolio. Obviously, a lot of people have been in love with gold. Let's see what they sold off today. So healthcare has been on a massive tear. Healthcare got sold off to the point of 1.4%. Let's pull up the chart here. So this thing just put in new all-time highs yesterday. So when it's down 1.4%, you barely had give back to the 20-day the 20-day moving average. Where I see this going is a very impressive rise. This was just a straight train from 146 all the way to this 159. And look at that wick, way too tall. The buyers rejected it, said, no, it's not worth this, at least not at this point in time. Whoops. And then it got sold off immediately. I don't think this is the end. I think it's going to consolidate a bit more. It is at its 21-day exponential moving average right here. Excuse me, 154. I think this probably goes to about like 151 half over the next week or so. And it's probably going to be a good buying opportunity. So, excuse me, it's always interesting to see how the thesis comes along. I haven't looked at these charts, every day for, a week and a half when I was, out on vacation. It's interesting. So nat gas, we had just said accumulation mode. Silver, wait for it a little bit, then you're going to want to buy it. Healthcare, give it a little bit, and you're going to want to buy it. Let's look at the next chart. Financials have been on a mad tear because I like to put these multiple sigma market moves on a day like today and then put them together, combine them, and I put together a view on the broader market. Originally, when I just looked at the SPY chart, I said it's going to be in distribution mode through the end of next week. And this looks like some of these securities need a little bit of time before you will want to put in buy orders. So let's look at financials. This one put in a new 52-week high on Tuesday, okay? And then kind of a tall wick here as well on that candle, if you can see. So buyers rejecting that, sellers taking over, and it's pulling down. Not as significantly hard as healthcare came down immediately to its 21-day exponential moving average. So now for financials, I'm going to assume this is in distribution mode as well. I think this has a date with about $43. I think this is going to go to about here. The negative growth is not going to be wonderful for banks. Obviously, the pending cuts that are very likely going to happen in 2 weeks are going to be, a boost for the banks. But with net interest income, sometimes it affects banks adversely. You saw it with Schwab. You saw it with the regional disaster when we had this era of low rate pretty low rates. So we'll see. But I think this is being distributed for the next week and a half. Again, similar to the market, you don't have to buy stuff immediately. And I think this is going to have a descent to its 21-day exponential moving average of around 44.15, potentially all the way down to 42. I see a couple of viewers on. If you have a ticker you want to put on, if you're just watching, say, hey, what's up? I'll look at whatever. But I still want to get through the charts of today. And then the next one is XLI. They sold it off in a significant multiple sigma manner today. The industrial's down 1.1. All this has to do with global growth scares. Let me pull this up. XLI. You're not going to be using much of machinery and cranes if the world's not growing and people can't find gigs, right? So this is again, this had its 52-week high right before the holiday at 131.59. Nice. I see a ticker in there. I will look it up. And this one quickly descended. It took a couple of days, but it's down. I see this going to distribution mode as well. Not 123 to 128 is where I'm eyeing for downside. I don't think it goes quite to 123 unless really people get freaked out. But I think we're going to 125 on this. So about pretty much more $2 more give back than it had today. And that'll take probably around 2 weeks to unfold. All right. Those were the big movers lower. Now, this is fun to me because I am a fin nerd. So the best 5 gainers of the past 5 days, VXX number 1. So that tells me it was entirely risk off over the past week. It was not the time to obviously put on call options or to chase stocks. Just not the way to be. This is what happened with VXX, a nice surge, and it was down 4.5% today, and it's still, excuse me, up 10.5% over the past week. So definitely volatility is back again. It seems we're getting to an interesting point. We're getting to 200-day moving average. I don't know if you could see it on the cursor here, but it's 54.38. And we are just closing below that now because of the drop it had. Very interesting move. I think it's going to have a little bit higher. I think it's going to actually like scare a few people, not significantly, but I think it's going to probably fool a couple of people with an ascent towards this 54 mark again, and then it'll probably start to descend. And I think this will take maybe, upwards of a week or so to unfold. But I think it's going to toggle and try and get above this 200-day moving average, and that can, freak some algos out. So that might be an interesting thing to look for with the VXX elevated as it was. You see the 200-day moving average starting to steady. It is still dropping, but not as precipitously as it was before. All right, so the best gainer in the past week, VXX. So if you were long volatility, congratulations. It's been a piece of crap, though, for the past year. Okay, so think about the broadening, think about positioning. Next biggest gainer of the past week, UNG. We just looked at UNG, so I'm not going to look at the chart, but UNG is what? It's a piece of crap. So they're piling into stuff that was not performing for whatever reason it is. Positioning, underexposure, way too deep in NVIDIA, mega cap tech. So you have to think about parts of the market as this. Another one, KWeb. We've been featuring KWeb, Chinese internet, for quite a while. I'll get to your chart, Brandon, and after I'm done with these. Thank you for the suggestion. Love it. So here's KWeb. We've been highlighting this a lot. So KWeb is one of the year's losers. It peaked here in May, and it's just a line here. The 200 moving average is a rock. It almost looks like it's held up by like a syndicate, like a stock. It's an IPO day off, and the bank is paid to sustain a level. So this thing is dead flat at 26.91. We are below it today. What do I think is going to happen for Chinese internet going forward short term? So again, reversal into positioning. They're going to pile into crap like this, underperformers like this. And I think this is being accumulated. I am picking my spots, getting long areas of the market, but I do think this is going to surge to about 26.5 or $1 higher, which is, nice move, 4% or so over the next 2 to 3 weeks. So just saying, I don't see a lot of attraction right now for the U.S. markets. They need a little bit of time to consolidate. You saw the charts of healthcare and financials, industrials need a little bit of time. And I see this specifically, this Chinese internet going to about, like 26.5. And where do we say that 200-day moving average was? 26.91. Maybe it gets there. I don't think so. I think it'll crap out, especially not given the large enduring animal spirits of the U.S. markets here. I just don't think it'll have enough. Maybe pop its head, but probably not, and then go lower. But for right now, I anticipate the next move. I think this will be up towards that 26.5 area over the next 2 to 3 weeks. All right. But KWeb, the third best gainer over the past 5 days, up 3%. So we had VIX up 10, NatGas up 7, KWeb up 3. All right. And we'll get to the next one, Jets. I know football is back. I forgot to wear my Eagles hat. Go Birds. In Brazil tomorrow. I don't think we're looking at EWZ today, but that one's been an interesting one. So airlines, not a great investment, but look what happened here. After the drop, you have a slant up in the 200-day moving average, obviously because it's been kind of a straight line since the Japan crash on August 5th. So we had a gain of 1650 all the way to 1875. Interesting candle here. Jets up 3% in the past week. Looking not too bad. Now what say I? Wow, that's solid English. I think that's it. I think that was very nice. This wick kind of tells me as well that the buyers rejected it and they don't like that level. I think that was a really nice gasp as it tries to dance with the 200-day moving average. I think it did a lot of work right now. And I think this is going to descend towards 18 even over the next 2 to 3 weeks. So just the way it is. Next, TLT. I was going to feature this one today because I had a mad bid today. Pretty significant as rates dropped. But it didn't make the cut. But let's look at the chart as TLT is very close to putting in new 52-week highs. Very close. It's trying to get that Christmas week high when it hit par, right, in terms of TLT at 100.57. Tough picture. I think it's still going to be in accumulation mode. I think it's got good momentum. But this is going to get tired right around there, about 100 even. So that's what I see. But this has looked good. Ever since, Independence Day, go figure, ironically. And then obviously a huge flight to safety when the Japan crash. And here we are now trying to just get very close to those 52-week highs. And you did see 52-week highs in some of the other bond ETFs today. So like I think VCIT, AGG. So it looks like it is coming. So I actually take back what I said. I think there's a good chance that this does do it. And as we saw, just technical analysis 101, this isn't buyers rejecting it through ugly candle wicks. This actually looks great. Opened here, the bottom of this candle, closed here. Tells me buying probably is not done, and you're going to have 52-week high probably imminently in TLT over the next week or two. And then that will be what? Meaning what? 52-week lows in rates ahead of the Fed cutting on the 18th. And now Citi, Goldman are saying that's going to be 50 bips, not 25. We'll see. That'll be kind of extreme. Again, like I said, if the market sniffs out the move and anticipates it perversely, if we get 50 bips, people are going to say, holy crap, the sky is falling. What's going on? Nobody can get a job and no one's building houses and jobless claims are going up and people will get scared and no one's going to be really buying AI stocks anymore. So that's something that you have to be aware of. That's a possibility in just 2 weeks. And top 5 losers of the past 5 days. So we went through Jets and TLT up 2%. Jets was up 3%. TLT up 2%. All right. Top 5 losers of the past 5 days. What are they selling? Bitto, the biggest loser. Okay. Kind of exactly what I said too. I got to say when I'm right. Got to say when I'm wrong. Bitto kind of did exactly what we thought. It exerted a lot of energy trying to get that 62K. People thought it was, the best thing. It was going to new all-time highs. With SPY getting so close at 564, 564 half. And then what happened? Big loser, down 11% in the past 5 days. No bueno. So now what? Let's pull up the chart here. Something that's like not really wonderful is the 200-day in the Bitto is just starting now to go down. So this is something that happens. It's just calculus when the inputs are going in and it's lower highs each time. And the high was put in March 13th. That's not great. Okay. So when Bitcoin put its highs in March, yeah, maybe it's basing for 6 months, but this does not look like basing. This looks like lower highs. And look at this. We have not closed above the 200-day moving average since July 26. Typically, my rule is right around a month for it to be a pretender. 5 weeks. So I had August 26th for this to recover. Specifically through Bitto, it had to recover to 2386. Forget August 26th. I'll take it right to September 5th, and it's still grossly underneath that. So I don't like the price action in Bitto. All that being said, I do think it's hit a near-term cycle low right around the $16.95, $17 level, which should be equivalent to like lower Bollinger Bands and different moving averages I have. I do think over the next 2 to 3 weeks, it would help if the market cooperated, which I'm not sure it will. I do see a potential move given the volatility of Bitcoin. I see it potentially moving to as high as 19 to 19.5 over the next 3 weeks. It's going to need not a lot of help. It doesn't look great. For Bitcoin. And I'm long in several accounts. So I'm talking my book, unfortunately, and not in a great way. So they're selling Bitcoin. What else are they selling? Oil. When you have global growth fears, what don't you need? Oil. People don't need it so much, right? Oil down 7% in the past week. Now what? Is it hitting a low? Do you buy it? So look at this. Also, similar to KWEB, how the 200-day moving average is just a straight line. The 200-day moving average for oil has not changed since May 15th. It has not changed, given a couple of pennies. So put in the high, April 12th. The 200-day moving average, which is, longer-term moving average, has just stayed staunch, flat at 74.45. We are kind of grossly underneath that. And given this, even on an up day of 40 bips, we are lower than the Japan crash. Not that it got taken out in the woodshed there, but I mean, it wasn't trading great. And now we're lower. Oil, okay, this is what I'm saying, that the market is not giving me warm fuzzies. Oil is an economic growth barometer. We're all the way back at February levels. Okay, you're at 7-month lows in oil. Not wonderful. I think this is low enough, and I think this might need about a month to try to recover towards 74.5. Okay, to try and recover that 200-day moving average. So I think we'll get ups and downs in this. Tough one. I think it'll frustrate more people. I wrote about that in Chart Advisor last weekend. Typically, that's what happens when this thing is a straight line. So KWEB is investing in frustrating investors. Oil, I see the same way, as it goes above it and then spends some time below it, but it just does not look wonderful. Bitcoin looks worse, in my opinion, because at least this is just flat in terms of 200-day moving average and support. Bitcoin's starting to look like it's rolling over, and folks are investing in other things. So I could be wrong, but not giving me warm fuzzies in terms of the market, in terms of these securities, especially when you're saying stuff like, oh, they're buying nat gas, or they're buying silver. It's a broadening. That's nice. But you got to be careful with growth stories like this. And of course, the most important chart in the market, semis, which is the third biggest loser in the past week, down 7%. You don't like to see that. This is the most important chart in the market, in my opinion. I think in many people's opinion. Come on. They are our generation's railroads, these semiconductors, okay? So this thing's gotten quite a haircut. Like I'm talking about the 5 days, it's down 7%. It was this shouldn't have happened on 7-Eleven, for example. We were outside of the mark of the upper Bollinger Band. And then what happened all the way on the Japan crash? We got below the 200 moving average. I think this is a steal. If you bought here, congratulations. So now what? 200-day moving average is still here. It's still picking up some slow, but it is starting to, go flatter than it has been in quite a while. Now what? This might have a bad day or two left in it. Basically, I see the low around 215. So another $10 potentially of pain. But I think after that, it's going to get back to 240. What people want, though, is, of course, what? New highs in NVIDIA, Micron, etc. I'm not sure when we get those, because I'm seeing a low around 215, then a move towards 240. And folks are going to say, there's not much more left in the tank. So we'll see. And then uranium down 7% is the fourth biggest mover, lower. We had called out the same exact thing in uranium, okay? This is a great example. This is technical analysis. You can use it for other instruments. When uranium cracked out here on July 18th, I said this has till about August 18th, August 25th to recover its 200-day moving average, or this is obviously going to start going lower. The 200-day moving average is black line, and it's just not going to be a winner anymore. Instead, look what happened on August 5th. It put in a 52-week low. That positive or negative momentum, super negative momentum. And then now you are getting the 200-day moving average to roll over. So not good in uranium. This was a huge tell here when look at these 4 bars. Look, it's trying to catch a falling knife from 28 to 22 in just a couple of days, Japan crash or not. All that being said, I think this might have a little bit more descent towards 23.35, and then it'll probably try to recover towards 25.75. So some volatility for that, but that's going to take about a month to unfold. All right. And then COPX, what don't you need? Copper is a big, industrial use metal. If we're not growing as a globe, then you don't really need copper miners as much. These guys have really been sold off aggressively quickly. So 44 to 39 when these growth fears happen. I don't think it's done yet. I think this goes lower to about 39 even, Kind of scary here that it's not above its 200 moving average. You want to see that. You want to see it lift above that. I still see this being negative for about a week or two towards 39 before it tries to recoup 42. But that's going to take some time, about a month and a half. So really fast, Brandon, you're up next. So best 3 absolute trades of the past 5 days: short Bitto, long VXX, long nat gas. If you were in those, congratulations. You absolutely cracked the market. I don't think you did because it's pretty hard. Okay, so his suggestion or his pick is CSX. Thank you, Brandon. So let's take a look at this. CSX is ground transportation, rail-based freight transportation, massive company, $65 billion market cap. Let's see. So beautiful, steady rising, 200-day moving. I take back the word beautiful. This thing really was the belle of the ball up until May 1st, Brandon. And then I don't really love the price action it's been having. It looks like there's better areas in the market of this, but not the worst investment. If you want to write in, Brandon, your time frame for this, it would be a little helpful. So I think this is still a little bit of accumulation mode. I want to see honestly what it does tomorrow because it had a nice ascent, honestly, and then this bar is massive today, the down 2.5% move. So it's pretty significant. I think it might have another up day and try and take back this level of where are we at here? Trying to make a move towards 34.5 to 35.30. I want to see if it does that in the next day or two. Otherwise, I think it's going to hang out right around here, around 34. One more quarter, then I'll move in. Narrowly positive still. Move on. Oh, then I'll move on. Yeah. Okay. If you have another ticker, that's cool. Yeah, this one's just not. It's a longer story. One more quarter, then I'll move on. Yeah, like we said, we're talking about the industrials and everything today. They had a massive run up, and I know this is in transportation subsector, but look at this price denial too when it put in its all-time highs. So the real level in Feb was not $40. That was getting denied. Okay, that was not, to me. I don't even see that as a true 52-week high for it. It's closer to here. So that's about it, man. And the 200-day moving average. So yeah, maybe another day or two, I think, as it tries to move towards 34.5 to 35. But other than that, I think it's going to move back towards this 34 even level. All right. That is it. A little bit longer today. I'll probably do a little bit more tomorrow too, because I want to recap the trades from the past year. All right. Peace. And I'll have Rocco back tomorrow too.